Hello and welcome to this week's global and domestic business news bulletin on S24. It's been a week of major pivots from Nigeria's exporter eyeing the east to a liability time bomb ticking beneath record oil profit. Here is your breakdown of the top stories shaping the economic landscape for the final week of February 2026. We begin with Deutsche Bank. Germany's largest lender has signaled that aggressive economic reforms, including the removal from the FATF grey list, are successfully restoring international investors' confidence. The bank highlighted improved transparency and anti-money laundering frameworks as key drivers. Corporate playbooks flipped. The Naira's recent stabilization nears 1,350 Naira per dollar has forced a total rewrite of corporate strategy. After years of defensive hedging, firms are now shifting from survival mode to aggressive growth as the currency records its first sustained annual period of stability in a decade. Foreign investors are doubling down on Nigeria's equity, with deal volumes hitting a staggering 2.56 trillion naira. This marks the highest activity since 2007, spurred by a market-determined exchange rate and an increased dollar liquidity, and an NNPC's profits time bomb. While the NNPC has recorded profits of 4.6 trillion naira, analysts at SBM Intelligence warned of an off-balance sheet time bomb totaling 6.3 trillion naira in liabilities. This includes roughly 5.4 trillion naira owed to refineries and various forward-scale commitments, and in telecom and banking debt resolution. In a major win for the digital economy, banks have settled the long-standing 300 billion naira USSD debt. This move has immediately boosted telecommunications investment sentiment and cleared the path for more collaborative fintech innovation. And FIFA has projected that the 2026 World Cup will generate $11 billion, while the US economy expects a $30 billion boost. The tournament is being hailed as a historic economic milestone for global sport broadcasting and hospitality. O&O PLC has moved to reward its stakeholders by distributing 604.35 million additional bonuses shares. This follows a flurry of corporate actions, including a proposed rights issues to strengthen its capital base. And onto Nigeria-Japan $50 million startup fund. A new $50 million Impact Innovation Fund has been launched in partnership with Japan. The fund targets early-stage startups in critical sectors like farming, health, and clean energy. While in corporate earnings spotlight, Naira Pharmaceuticals returned to profitability with 982 million naira in PAT, reversing 3 years of losses, while MTN Nigeria rebounded with a massive 1.1 trillion naira profit, driven by a 55% surge in data revenue and FX gains. In energy and infrastructure challenges, despite high diesel costs, only 20% of Nigeria's 42,000 telecom towers have transitioned to solar, leaving the industry at a diesel-burning crossroad, costing 696 billion naira annually. An innovation probe, the FCCPC is investigating local airlines for sharp fare spikes during December, with some tickets jumping as much as 405,000 naira despite stable fuel costs. And on power supply woes, Speaker Tajuddin Abbas warns that persistent poor power supply is crippling SMEs with worsening living conditions across the Federation. And on the global trade shift, driven by the US tariffs uncertainty, African nations are pivoting towards the Chinese renminbi. Nigerian exporters are especially eyeing China's new zero-duty policy on Africa's food as a safer harbor than the traditional Western markets. And finally, Hyundai Motor Group has announced a $3.6 billion investment to build a massive AI data center and a robot-human hybrid factory in South Korea, signaling a major leap into autonomous manufacturing. That concludes our bulletin for the week. As the global economy continues its rapid realignment, the pivot to Asia and the local push for energy stability will be the key trends to watch. I am Hadiza Galadima.